Welcome in, folks. Got a good video planned for you here today. 4 core subjects we're going to get into in this one here today. The first thing we're going to do is we're going to go in depth in the $2 million plus public account. I'm going to show you every single position I have in there, cost basis, and all those sorts of things. Second thing we're going to do is get into what stocks do I want out of? What stocks am I holding that I'm like, I need to move on from this position, okay? Whether that means selling at a loss or taking a profit on a stock, so we'll speak about that. Third thing we're going to get into in this video here today is what stocks do I want to buy aggressively right now? Where are the biggest opportunities I see in the stock market right now? And the fourth thing we're going to get into in this video here today is a new change I'm making to the portfolio that I absolutely love, and I'll tell you about that in this video here today, okay? Alrighty, guys, all I need from you, hit that like button on this video, please, and make sure you're subscribed. That's all I need from you guys for putting this beast here together for you guys here today, okay? If you need help understanding income statements, balance sheets, cash flows, if you're getting a great deal on a stock, if you're getting ripped off when you go to buy a stock, how to run portfolios, things like that, apply to join a private group. That will be the pinned comment down there. You get access to all my best course curriculums, plus access to the 6 and 7 figure plus Discord community, all those sorts of things. That will be pinned comment down there to take your game up to another level, okay? Alrighty, so let's start going through this. So right at the top, biggest position in the portfolio is Meta. Meta Platforms, it's been a stock I've held for many years, to be honest, and I bought this stock on and off for many years. It's my big dog position. We're now up over 303% on this position, up $611,000. It's an $812,000 position. I hold 1,700 shares in this particular stock. So it's doing us very well. We all know Meta. It's Facebook, it's Instagram, it's WhatsApp, it's the internet, basically at the end of the day, right? Plus they're working on llama models, big stuff coming with AI. It's going to be a game changer for Meta long term, okay? Now, in terms of Meta, this just goes to show you when you have an opportunity to buy a great company at silly pricing, you've got to really take advantage of those opportunities because you don't get it very often. You might get a truly great company to get it at silly pricing. You might get that to happen every 5, 10, maybe 15 years. And so Meta went through one of those time periods back in 2022. And I don't think we'll ever see Meta even remotely close to those prices ever again, even in large recessions, even in high unemployment cycles. It doesn't really matter. We will never see Meta at these sorts of pricing again, unless it's like 100 years from now and the company's irrelevant at that time, right? But somebody was selling me shares right here on November 3rd, 2022. Somebody sold me 62 shares at $88.94. Like, oh my gosh, like that's unbelievable. Now you might say, okay, Meta's gone up a lot. That's great. Is it still a buy, right? Well, let me show you this. This is going to blow your mind, okay? So whenever you want to think about, like, is a stock still a good deal, you want to really compare them also against their peers. For Meta, their peers are a lot of the other big tech companies. So you can compare them with Google, you compare them with Microsoft, Apple, these sorts of other giant companies, right? So here I just compared them versus like a Microsoft and an Apple, for instance, right? Because, Meta could go for the throne long term in terms of being the biggest company in the world, market cap wise, right? And if we go ahead and take a peek here, forward P is 23.5 on Meta, which, by the way, it's probably actually lower than that in reality. Just on 1000xstocks.com, we're taking basically kind of analyst estimates and kind of what they're expecting. So in average, right? So 23.5, we can say roughly. Microsoft's at 34.5, right? So 11 percentage points higher, basically. That's a lot. That's 11 points higher on a forward P is a lot. And then Apple's also trading higher. Now, it's also much lower on a trailing 12-month P. But the fascinating thing is when you look at Meta, it's going to have better revenue growth. It has better revenue growth. It will have better revenue growth moving forward. And it has better earnings per share growth and will have better earnings per share growth moving forward. So we're getting a company that's far more undervalued than companies like Microsoft and Apple and these other companies, but we're getting it with higher growth rates. That's what makes Meta still today, even, a little under $500, that's what makes that stock still a buy. And that's why that stock will likely continue to move up over the coming years, despite whatever happens out there, okay? So Meta, it's my biggest position for a reason, and it's for a lot of reasons, okay? Second biggest position in the public count is Tesla. We're up $257,000 on the stock, up 551%. Obviously, Tesla's had a very tumultuous, is that a right word to use? Okay, a very tough last couple years, right? But it's really had a tremendous time over time, right? We look at my shares that I own here, right? I mean, many of my shares are like a 10x plus I made on this stock over time. And this is despite the stock having already crashed, right? The stock's down 50% plus from the peak. It was, a couple years ago. And we're still at a 10x plus on many of these shares that I bought May 13th, 2019, May 17th, 2019, May 20th. I mean, look at these, pretty unbelievable. And so when people say, how could Tesla shareholders, how could they ever think that the Elon Musk pay package should go through, right? Well, shareholders like myself, we have no issue with the pay package going through for two core reasons. One, if you're a believer and you believe in like being a man of your word, right? Well, that was an agreed upon deal, right, with Elon Musk's pay package years ago. The second reason we don't have an issue with it is, guess why? Because we've made a fortune on this stock over time. So when I look at this, and never mind all the shares I took profits on years ago, right? When I look at Tesla, I'm like, this stock changed, it was one of my best stocks ever. It's not my best stock ever, but it's one of the best I've ever held, right? And so why wouldn't I agree to the pay package? Like, he's done a heck of a job being CEO of the company, despite all the drama and all this stuff, blah, blah, blah. How many people are giving you this sort of return? Not many. And this is a return even though the stock's crashed. Think about that for a moment. So that's why I have no problem with that pay package, right? Next one up here, elf on a shelf. Third biggest position in the portfolio. Obviously, tremendous gainer for us over time, 2,529%. We're up $184,000 on the stock and put $7,279 into the stock, right? I'll put it to you very simple in regards to elf on a shelf. Look at that growth over time. 91 million a quarter, then 98 million a quarter, 105, 122, 122, 146 million a quarter, 187 million a quarter, 216 a quarter, 215 a quarter, 270 a quarter, 321 a quarter. This company is going to start doing $500 million plus a quarter in revenue, and then they're going to start doing $1 billion plus a revenue a quarter, right? And so when I look at a stock like ELF, it's been an absolute growth engine and just a tremendous performer over time. Valuation looks high if you compare them versus an average stock, but guess what? You're not getting this sort of growth from an average stock. It's so abnormally ridiculous. The company's competing on such a high level, it's insane. That's why we've been able to get those returns over time. Absolutely tremendous. The fourth biggest position in the public account, PayPal. So this one hasn't done anything for us as of yet. We're down 1% on this stock. It's a $191,000 position here. In regards to PayPal, here's the thing. The stock's very, very attractive. Forward P on the stock is around 13, right? Trailing 12-month P is under 15. Look at the PEG ratio on this baby. It's about 0.78, right? If we look at growth rates expected here, around 8% this year, around 8% next year. Earnings per share growth is expected to far outstrip, double up or more than double up the revenue growth, which I'm expecting to happen here for PayPal. So when I can get a company growing, let's call it a little under 10% revenues, right, top line, and I expect the company to do that in years to go in the future, and I can get them growing the bottom line double digits, well, if I can get that company at a forward P of under 20, and especially if I can get it like under 15, it's stealing money. So PayPal, I think, will be a great performing stock for us over time. It just hasn't been yet, but I think it will be a tremendous performer. I think in the future you'll look and it'll show a very nice gain here, but it's a process to work through. The fifth biggest position in the public count is Amazon stock, otherwise known as Amazing Zon. We're up about 68% in the stock so far, up $77,000 in the stock. Now, if you're looking at Amazon, right, here's a problem. The valuation, right? The forward P on the stock is around 42. Now keep in mind, Amazon's a company that many times comes in and beats their numbers. So it's very, very probable that that number is actually lower in reality because Amazon will probably come in and beat their numbers. But you can look at that and you say, you know what, this company, I don't know if it's really a good deal, right? Well, here's the deal. The company's going to grow top line double digits for years to go, meaning 10% plus for years to go in the future, right? They're also growing bottom line at pretty much a 2x clip of what their revenue is going to grow at. So, the way I would think about it is if Amazon grows revenue 12%, I would think EPS is going to grow by at least 24%, right? And that's going to play out for years to go in the future. So when I look at Amazon overall, the stock's actually undervalued. And if you're wondering, Could I ever get this stock to trade for like a 20 forward P? It's just not possible. Not with their sort of growth rates. If Amazon is ever trading at that, it likely means their growth is done as a company, and that's no time soon. Because the Amazon Web Services still has a long runway of growth. The e-commerce business still has a long runway of growth. And then the advertising business also has a long runway of growth. So the three core businesses still have long runways of growth ahead of them. So you can't really get this stock to trade at, the valuations people wish. Like, I wish it would be at a 20, 25 forward P. Yeah, you're just not getting Amazon at that. I hate to break the news to you. That's not happening here, okay? By the way, what I'm showing you guys here is 1000xstocks.com. So this is my service where I can look at all the different valuation metrics. We're adding 14 new metrics over the next couple of weeks here. Plus, we're looking into we just added conference call transcripts as well as conference calls on the service. And so you can now just type in a ticker symbol and listen to a conference call. So if you want access to 1000xstocks.com, if you want to apply for access, go to www.1000xstocks.com. And then once you become a member in there, we send you the steel card in the mail, baby. Oh yeah, you get your 1000xstocks.com, and then you get access to the full service, the compare feature, the search feature, conference calls, and then all the future features we're working on behind the scenes right now, okay? Palantir is the sixth biggest stock up here in the public count. We're up 137% on the stock so far, up $67,000, $116,000 position for us. And Palantir, it's a very controversial stock. It shouldn't be as controversial as it is, right? People always get caught up into the growth rates, Alex Karp, these sorts of things. I think over the past, I would say 18 months, Palantir's just kind of decimated the bear case. Absolutely decimated it now at this point in time. The only thing the bears really have to go on now at this point in time is the forward P, right? In the trailing 12-month P. They trade very rich compared to the market. Very rich, right? We can call it 3x or so where the market trades at on average. But here's the deal. The company is expected to be a 20% grower for years and years and years to go in the future, right? And these sorts of business models are very sticky, and many times their earnings per share can far outstrip what their revenues are going up, right? And then they become cash flow machines. They come out with new products and services to sell their existing base, plus new customers keep attracting more and more into the ecosystem. Then also these SaaS companies can buy out other softwares over time. I don't know if Palantir would ever really be interested in that because they just build, the best of the best products in-house. So I'm not sure they would do that. But if they want to go that route, they can go that route. So these sorts of companies will always trade it at much richer valuations than where the market trades at. If you ever think Palantir is going to trade at a forward PE, let's say the market's trading at a 19 forward P at a particular time. If you think Palantir is going to trade at 19, it's just not going to happen because these business models always command a big premium valuation over the market. That's the way it is. They're the creme de la creme, right? If you look at, these other kind of more SaaS related companies, I guess you can say that you would look at something like a Salesforce, you look at something like a Microsoft, look at the valuations these stocks trade at. And this isn't crazy. This is where these stocks usually trade at. High 20s or even into the 30s when it comes to their forward Ps, right? Palantir is about 2x what those companies are trading at, right? But remember, revenue growth is about 2x what those companies have, right? And also, Palantir is at infant stage of profitability versus these other companies, Salesforce and Microsoft. These are much more mature companies when it comes to their profitability. So if you're thinking who has a lot more room for growth for that earnings per share over the next however many years, right, 10 years, it's certainly Palantir. They have a lot more room for growth. Now, members of the private group, I don't know if you guys got to see this, but I did do a full video going in depth on my Palantir projections, 2024 through 2028. So anybody that's in my private stock group, if you're interested in Palantir stock, you definitely want to check out that video. My seventh position up here, and then once we get through these positions, I'll take you through exactly what stocks I'm looking at selling and what stocks I'm looking at buying aggressively. Revolve is my seventh biggest position here. It's a $52,000 position. We're up $17,700 on this one. As of right now, at 51%. It's been a stock I've held for quite some time here. And, the issue with Revolve is they're going through some challenges in their business model. Their customer base has really been hit by inflation very hard over the past 3 years. And the problem with Revolve, their customer base is kind of up, middle class and upper middle class. It's a lot of their customer base. And, that's been one of the hardest hit brackets kind of by inflation overall. And so when you're selling their average sales around $300, sometimes it's a little tougher for a Revolve at this particular time, and they have certainly been going through some challenges. Now, the earnings per share is expected to get much better over this next year, which is exciting, but it's been a pretty depressing stock here for a bit of time, right? Cheesecake Factory is my 8th biggest position. This one I'm very, very bullish on, extremely bullish on. We're up about 15% on the stock so far. It's also a dividend payer, so it pays me out dividends every 3 months, and it's a very nice dividend yield on it as well. So it's nice to collect those dividend checks literally every 3 months in regards to this one, but it's getting us nice capital appreciation. And in regards to Cheesecake, if you want to try to figure out is this stock undervalued, compare them versus their peers. So first off, they have more growth levers in their company than any other restaurant chain out there. I've studied every single restaurant chain in the public markets. No one has as many growth levers for the next decade this Cheesecake does, because they not only have the Cheesecake brand, but they have North Italia, which has ridiculous growth for the next 10 years, Flower Child, which has ridiculous growth for the next 10 years, and then they have several other concepts that look like they have a lot of promising things in their future. So I'm getting the stock at a gem price of a forward P that's lower than Darden Restaurants and significantly lower than Texas Roadhouse, right? Which, if you're going to talk about who's the other restaurant chain I really respect on a high level, is Texas Roadhouse. Now, here's the thing. Starting next year, revenue growth for Cheesecake is going to outpace Darden Restaurants and Texas Roadhouse likely. And then earnings per share growth should also outpace those companies as well. So that's the beauty of Cheesecake, and that's why I think the stock has so much upside over the coming years. Is I'm getting it for a far cheaper valuation, but it's going to have far better growth in my opinion. That's the magic of Cheesecake Factory, and I think we're just at the very early innings of seeing this story play out. That's going to be a fun story over the next several years, in my opinion, right? Now, you could say, well, what happens if a big recession happens? Could it affect Cheesecake? Sure, but if you look back to the Great Financial Crisis, the company actually did very well in the Great Financial Crisis, despite everything that happened there and unemployment going in, nearly 10%, right? So they outperform their peers on almost any market, inflation, recession, anything like that. Nike, 9th biggest position, not doing well in it so far, down about 10%, down about $4,000 on this one. It's a $37,000 position at the moment. And then NVIDIA is my 10th biggest position in the portfolio. This one's going very well so far, up 22% already on this one, $35,000 position in regards to NVIDIA. People say, is NVIDIA a ripoff? It's gone up so much. It must not be a buy. Here's the deal. 2x, it's trading roughly 2x where the market trades at forward PE wise, but the revenue growth is like 20x, more than 20x where the market trades at, right? And even if you think their growth is going to slow way down for next year, which some folks do and a lot of analysts do, so let's say they grow 26% next year. Well, that's still at 4x roughly where average stocks trade out in the market with a 2x valuation. So NVIDIA actually still is undervalued, believe it or not, despite the stock doing so well. And then I got a bunch of really small positions in the portfolio, $27,000 positions. So these are like 1% or under positions. Planet is a really small position, right? SoFi is a really small position here in the portfolio. Fubo is a really small position. And then I got Chipotle hedge, Toll Brothers hedge, really small positions there. And then Shopify is like a brand new position, and that's a really small one. That's 0.03% of the portfolio so far. So that's looking at the overall portfolio, right? So now let's go ahead and talk about what stocks I want out of, okay? Like what stocks am I kind of like, you know what, I'm strongly considering moving on from these stocks, and then what stocks am I thinking about like, I might have to buy the stock very aggressively, okay? So here's the deal, okay? Revolve is a maybe, and NVIDIA is a maybe, okay? Here's kind of how I think about these stocks. So first off, there's several stocks I want to buy in the portfolio. And so there it's like, I'm looking and I'm like, I could get, roughly $90,000 of proceeds from that to put in some other positions I really like, right? So Revolve, I've been a little let down by Revolve. I don't think they're running their business model as well as they could have. Now, it's a tough environment, but one thing I hate is I hate having to make excuses for my companies and say, it's a tough environment, things are tough, inflation, blah, blah, blah. Because when I look out there, I own many other stocks that, yeah, we're going through inflation. Yeah, it's been tough on the consumer, but many of my other companies are still performing great. And so The thing I've kind of learned in this market, I think it's a great time to look at the companies that are growing. Who are the companies that are really growing in this environment? Because we're seeing so many companies with their revenues going down right now, right? But who are the companies that can grow in this environment? That shows a lot of strength. That you don't need a booming economy. You don't need a booming middle class. You know, even in a tough environment, you're still putting up your numbers, right? Look at a company like a Meta. I mean, you wouldn't even know it's tough times. You wouldn't even know it's inflation for 3 years, right? When you look at Meta's numbers, they're tremendous. You look at Apple's numbers, you're like, oh, it does look like 3 years of inflation when you look at their iPhone numbers being down 10%. So we're really in a market right now that is kind of the haves and have-nots, and it really is proving like who are the very best companies. And then what are the companies that are maybe a little weaker, right? What are the companies that really need, you know, real wages to go up and up and up for them to do well with their numbers, right? Because we've really, you know, if you look at the past 3+ years, real wages have gone down considerably over the past 3 years, which is not great. Like, you want to see real wages going up. So if you can put up great numbers in this environment, you got something. You're really running your business top tier. Like, you're a top level company. Because if you can grow in this environment, what can you do when real wages are going up and up year after year after year, when the consumer is doing great, when the middle class is actually doing great, when small business is doing great? What numbers will you put up in that environment, right? And so I look at a Revolve and I say, the numbers have been very depressing for a year and a half now at this point in time. They got a great balance sheet. The CEOs have done a really good job outside of really the past year and a half, in my opinion. And so that's when I look at it, and it's going to be a tough decision because I'm like, I don't know, man. It's something I'm considering. Will I make the move? I don't know. But it is something I'm considering, and it's an opportunity to take a big profit too. It's not like it's a small, you know, gainer. It's a 50% plus gainer. So we'll see. We'll see. NVIDIA is another one that I've considered. And here's the deal. The stock split's coming up in June, right? So my thought is, okay, let's say NVIDIA goes on another massive bullish run here, right? Into the stock split, and then after the stock split, everybody's all jazzed up over NVIDIA. Oh my gosh, it's still a buy. Stock split excitement. So you got like the fundamental case along with the trading case around the stock split. And then after that, right, and retail jumping in, because then the share price is going to go from $1,000 to $100, right? Or 1,000 something to 100 something, right? And so everybody's all excited about that. And next thing you know, the stock goes on this crazy epic run over the next few weeks. I don't know. I've considered like maybe it reaches like the biggest market cap in the world, which could happen. Maybe that's a point in time where I'm like, you know what? Let me go ahead and take profits out of this one. Because my thing with NVIDIA is I don't think the run's done in terms of fundamentals around the company. I think the fundamentals of the company are going to get better over the next probably 12 to 18 months. I do have question marks in 2026 and beyond for NVIDIA. That's where I start to have some question marks about some of the growth rates and if they can still put up those numbers. And so there is a potential in regards to NVIDIA that growth slows majorly in the back half of 2025, despite them having new chips, because they should be launching new chips every year. But despite that, the growth could slow significantly in the back half of 2025. And then the growth could be pretty slow in 2026, and then you could get another major down cycle, which is very natural. These big chip cycles usually last around 3 to 4 years for NVIDIA, sometimes up to 5 years. And so it's not crazy to imagine kind of a downward, and then that would be a very vicious move, obviously, for the stock. We see NVIDIA, stock gets hit 30, 40, 50, 60% in those sorts of environments. So I don't know, it's just something I'm considering. I'm like, if I could take a 40, 50% gain on this one, and the market cap is trading at that time at, let's say, the biggest in the world, I don't know, it might be an opportunity that I say, you know what, I'll probably end up regretting it long term, like I always have. Like, I used to own NVIDIA insanely cheap years ago, and then I took a quick profit on it. So, it would probably be the same story again, and I'll regret it. It'll probably be a $10 trillion company. I'm like, dang it, why did I get out of NVIDIA? Like, I should have held it all the way through, right? So, but that's the story with me with NVIDIA. We have a very one of those sorts of relationships with each other. I use it for the short term, and then I get good stuff, and then I regret getting out of it. Okay, alrighty. So next one up here. Now, what am I looking to buy right now aggressively, right? And the only reason I really look to even sell some of these stocks is because there's got to be some opportunities, and there's some opportunities I really like in this market, okay? Here's some of them. Nike. I love Nike. Oh my gosh. Like, if I just think about a brand that is going to far outlast everybody watching this video right now, it's Nike. They got it. They just got it like that. They know how to keep that brand relevant decade after decade, generation after generation. They are the top tier. Like, if I think about the top tier companies in the world, Nike's right up there. I understand their growth has not been the most exciting over the past, year or two. That is what it is. They've gone through these tough cycles before, and then they always emerge stronger and better than ever. And I think that's going to happen again here with Nike overall. So Nike is extremely attractive to me right now. I want to build, I would love to have 6 figures in Nike. I would love to have more than 6 figures in Nike. I would love that to be one of my biggest positions. That I sleep well at night, holding Nike. SoFi. I really like SoFi. Under $7. I like this one. Now, I do worry a little bit about SoFi if we go into a big recession and unemployment goes up. I worry about, but that I could say that about every single bank. Right? And that's one of the reasons I don't really like holding bank-related stocks, right? And I know people will say, oh, SoFi is a tech company. It's not just a bank. Sure, but it's still a bank, okay? It's just a very fast-growing online bank, basically. But SoFi, I do look at that one. It's a very small position. It's about 1% of the portfolio. I would love to bring it up to 2% of the portfolio. Love to do that. Do I want to build SoFi into some massive position? No. If SoFi the only way SoFi could ever grow into a 6-figure position is if it goes up a ton. Do I want to put 6 figures in SoFi? No. I don't feel comfortable. I don't feel comfortable putting 6 figures in probably any bank. If I did, maybe it's JP Morgan. But yeah, I'm not the type that's I want to put 6 figures in a bank. It doesn't matter, even if it's SoFi. But could I have $40,000 of my own money into it? I could have $40,000 of my own money into it, but not $100,000 plus. That would have to grow into 100K plus position. Shopify. If there's a stock I need to build massively in this portfolio, it's Shopify. That's a company I look at. All this inflation, weak consumer, this bad, that bad consumer confidence, small business index bad. All these metrics, all these numbers, all these companies that are out there reporting depressing numbers. And then you have Shopify, you wouldn't even know it's bad times. Look at Shopify's latest numbers out of that company. Look at their gross merchandising volume. Look at their revenue. Look at their gross profit. Look at all those numbers across the board. You would think it's boom times. You would think this is the greatest economy in history if you looked at Shopify's numbers. If you look at Starbucks and many of these other companies, you'd be like, oh no, this is no bueno. You look at these indexes, you look at a small bit, you'd say, no, it's not good times. You look at Shopify's numbers and you're like, this has got to be the greatest economy in history. Oh my gosh, it's amazing, right? And so when I see companies like that, a Shopify putting up these sorts of numbers in this environment, I think about what can this company do when small businesses are feeling confident about their decisions, when the consumer is feeling confident. Like what type of numbers can a Shopify put up in that environment? When real wages are going up and up and up, what can Shopify put up in that environment? And then I think about a consistent business model that just puts up great growth year in and year out that I don't have to stress over, right? That's Shopify. NVIDIA, we just spoke about that. It's been such a tremendous stock. It's been treating me very well. But they go through major booms and major busts. That's why that stock goes, Shopify, it's not really like that. It's just consistent growth. The only time they had some sort of parabolic type growth was really during Rona, right? And we can understand that. That was during, obviously, shutdowns and all that. And so different environment. So Shopify, they keep their pedal to the metal. They put up these great numbers quarter in and quarter out. And that's just one that I really want to have to be a big position. You might say, well, could you really have Shopify as a big position in Amazon? Sure. Their business models are so different. The use case is so different. Amazon's a play on not only e-commerce, right? But in terms of people using the Amazon app and, me going to order something, right? But it's also a play on AWS, it's also a play on advertising. Shopify's a very different. And when I think about Shopify, I think about I'm ordering directly from a company. I think about small business. You even think about in-store now, because Shopify is getting much bigger there. I think about payments. I think about a lot of different ways I would use Shopify that I would not use for Amazon, right? So they're very different use case, and that's what everybody has to understand in regards to that one. So I would have no problem having 6 figures in Shopify and 6 figures in Amazon. No problem at all. They're much less competitors than I think a lot of folks realize, okay? Now, there's some positions I'm tempted to buy also. The Planet, I'm actually very tempted. I'm very confident the Planet's business model has bottomed. And I'm very confident that we're going to see the numbers get better and better and better out of the Planet for the next several years. And so when I think about a business model that I believe has bottomed and things are only going to get better from here, it's very tempting to buy that stock, especially when I'm down significantly on it, right? So it's very tempting. It's very tempting. Fubo, also very tempting. That's could it go to zero in 12 to 18 months? Sure. Could it 10x in 12 to 18 months? Sure. So that's why Fubo is like, dang, it's one of the most interesting risk reward profiles in the entire stock market right now. Because I'm looking and I'm like, one side, it's like zeros over here. And I'm like, oh my gosh, like if they make it through the next 18 months and they flip to profitability, it's like a 10x plus opportunity. So I'm like, that's one that's very tempting. And then the other thing, I'm very tempted to buy more Chipotle put options. But I might wait till after the stock split. Because the stock split's coming in next month, right? And so I don't know if I want to buy more puts ready for that stock split, because there could be a whole cycle of people buying it before the stock split because they believe it's going to go up a bunch more after the stock split, and then it could go up a bunch more after the stock split because then it's going to become obviously a way cheaper stock, so retail could get involved. And so Chipotle is that stock is gonna have a big downfall in my opinion. I'm not even questioning. Like, I'm very confident Chipotle stock will crash, but to get the timing right is very difficult, especially with this whole stock split situation screwing up everything. I think the downfall in Chipotle probably already started, but because of the stock split, it's hard to get that stock down. So I don't know. We'll see. But that is another temptation I have out there to hedge, right? Now, next thing up here, a new change to portfolio, right? So I made a new change to portfolio this year. Basically, in the past, what I had done with the public account always was just random deposits. So it's like, I want to buy a stock, so I want to put in a few $1,000s here or there, right? And I will make my buy, and it's like random. But what I started this year is every week buys. So I deposit $500 every week, and then I go ahead and make my buys each Friday, right? And then if the market's closing on Friday, then I'll buy on a Thursday. And I love this. I absolutely love this. Now, I stole this idea from the Patreon, because I started the Patreon at the beginning of 2023, right? And the goal with the Patreon was to, people could support my content on Patreon and whatnot, but to everybody see how I build up a portfolio with a small amount of money. So I deposit only $150 a week last year, right? And this year I changed it to $250 a week, right? And so everybody's been able to see exactly how I built this portfolio, right? Which is already outperforming the market. I like it a lot. Not as well as a public account, but that's fine. We'll see crazy outperformance in my opinion over the coming years. We'll see. But already over 14,000, things are looking really good in the Patreon portfolio. And I love the feeling of buying every single week. And I think that's setting up the Patreon portfolio to perform tremendous over the coming years, right? And so when I think about this overall, I love this feeling. And other people, you might want to adopt this, a strategy of basically putting yourself in a position to buy every week or every other week. Because one, it leaves me excited to buy every single week. Like I look forward to Fridays. I usually didn't look forward to Fridays because I love to work, right? But I look forward to Fridays because I'm like, yes, I get to buy like every week, right? I'm buying in the Patreon portfolio. I'm buying in my public account. That's exciting to me. Second thing is it takes the pressure off of the whole trying to time the market, right? Because if you're just doing random deposits and that's the only way you're buying, it's kind of is a little bit of time in the market, right? And you start to kind of play these games mentally of like, well, maybe the market's going to drop this week, and so maybe I'll buy next week and I'll wait on that stock, and it's not great, right? Many times it can produce actually worse results. Third thing is I'm not scared of market drops, right? I welcome them. Now, mentally, I'm just kind of already on that level because I've been in this game for 15 years, but also just like knowing I'm going to have deposits coming, I'm like, okay, drop the market this week. I'm buying this week. Like, I want stocks for cheaper. Like, do it, baby. Send Shopify down to 55. Like, rub my hands. Thank you. Fourth thing is I think it sets a really good example of dollar cost averaging and buying consistently in my portfolios overall, which I think is healthy for everybody to kind of see that, okay? Hope you guys enjoyed this video here today. If you're looking to take your investing game up to a much higher level, apply for my private group. That will be the pinned comment down there here today. You get access to all my best course curriculums, teaching you everything I got up here with my hair that is slowly coming back to life and slowly growing again. And you get access to the Discord community, access to exclusive videos each week. Pinned comment down there, apply, take your game up to a much higher level. Much love and have a great day.